Hello and welcome to the Friday wrap up here on Landy's Crypto Corner. Today is January 10th, 2025. Yes, I did have to look at the date again so that I made sure to read 2025 correctly. But we're looking at Bitcoin as always. We're going to follow up with where we left off on Wednesday's video. And that is where we did see the Wednesday into Thursday candle. Basically front run the close open here on Wednesday's candle. And one of the things that we were looking for, at least in some of the lower term timeframes, is, coming into the zone of interest that we had talked about. So we did get a deviation. This is a lower low on a close and a swing. So, although we did get the trend break, technically lower low on the swing and close, but this would meet the criteria of equal lows in my book, but I wouldn't get too excited about that until we take a deeper look at price action here. So in terms of trend, we still have a downtrend with a deviation high here. But if the bulls can recover and push back to the top side here, which is that main overhead resistance where we have the common resistance from over here, and I'll throw on the support and resistance zones here in just a moment, but this is the high that needs to be taken out now. Unless Bitcoin puts in another lower high and can hold this current low and then take out that lower high, that's where we can look for trend reversal. But in this case, we need to see the high from Tuesday taken out to the upside here at 102,735, and then some higher low price action from there, higher low equal low price action from there for a reversal. Now, how likely is that, going to be? No one can really tell you, but we can get a pretty good idea of where things might be, at least coming into this weekend, and what we want to see if we're bullish and if we're bearish. And then also, what might happen coming into that Monday session, where, of course, I will talk to you later in that day after the Monday close. But in this case, there's not too much else to talk about here other than, throwing on the support and resistance zones to kind of remind you of what those are. And for those that are new here, on Bitcoin's big expansive move up, we did see a little bit of a pit stop and sideways price action with a nice higher low on a swing and a close. So we did see this occur right around a major fib level. Now, this might not be one that you've seen before, but this is the 1.168, not 618, but 168. And this is 16.8% above the $69,000 high when taking a fib pull of the bear market from the high at 69 down to the low at $15,500. This is a well back-tested Fibonacci level for myself in traditional markets, commodities, and then of course in the crypto markets as well. So and by the way, for those that might want to check it out and do some back testing on it, it works in Forex as well, when you're doing fib extensions in particular. So we did see Bitcoin put in a nice higher low right there on the swing and the close here before moving up, and then back testing this area as support, because we did see the top side of this area where Bitcoin was finding resistance at around $92,000 did get broken on a close. We came back and we saw Bitcoin retest that on a close after dipping in for some liquidity before moving on to our $108,000 all-time high. And of course, we did get some price action in and around here on the big December 5th candle. So 30 days out from the election and when things really started to kick off in terms of expansive structure here on Bitcoin, we did see a front run of $92,000, not once, but twice and three times here before dipping in for liquidity. Then, of course, we just saw this again on Thursday's candle. So Friday candle was up, a little bit of rejection around the basis band here. Of course, the basis band is the 20 simple moving average. And then we have 1, 2, and 3 standard deviations to the upside and 1, 2, and 3 standard deviations away from that on the downside. And that's how we're measuring volatility as it relates to price action and the Bollinger Bands here. So in this case, if we did see Bitcoin dive back down into the support zone here, I'm not really looking for too much more unless we see closes below the lower second. Now, wicks can kind of land anywhere, but if we do see closes below the lower second, if we didn't already see the downside area of this zone, so we've got the top side here at 92. If we didn't already see down here by the lower third hit, I would be looking for it to get hit there at 88,700. Any breakdown on a close of that area, and I would be looking for expansion over here into some of these order block candles. Yes, I identify order block candles a little bit differently than some of you might be familiar with, but in general, somewhere around the 87,000 to 87,500 area is fair game. So, a little over $1,000 drop from there to get to the close open here. And then, of course, $85,000 is fair game. Any expansion below there, we're looking like, 85 to 80, 80 to 75, and then of course 75 in for a retest, kind of 73 to 75 at the top side of the prior consolidation highs before this nice breakout and run up to the new highs. Now to the top side, if Bitcoin can get back on top of this basis band at around $96,000, you can see that there has been a little bit of common support and resistance in this area. So we did see this area as support and then retested as resistance, and that's kind of coming off of this low side structure over here at just shy of $96,000. That is where the Friday candle essentially rejected, was right there on this close open and the basis band. So anywhere above there, I would look for Bitcoin to give an attempt up to, at minimum, a little bit higher than that, around $96.5 to maybe $97,000 around this low. But realistically, I'm looking back to, kind of the structures over here at 97.5 to the high up here at just under $100,000. You can just call it $100,000. That is the area that I want to see Bitcoin break above. And of course, it will have to contend with the upper first standard deviation of volatility there at around 98.5. But that's, encompassed within that zone of interest that I just talked about. So about 90, right around 97.5 to $100,000. We got that 98.5 by the upper first. Then I would look for a retest of our green overhead resistance here, our green box. Of course, this encompasses the big wick up to $104,000 even on spot price. Of course, we did have the close open resistance after testing in on a bunch of swings and lower term timeframes before going up to put in the actual all-time high here at $106,000 roughly on a close, just slightly above there, to 108, or just slightly above there at 108, almost 400. So this would be the next area of interest. Why? Because the upper second standard deviation is there. If you do see a close above $101,000, which is right around kind of them, just kind of ballpark in the median of all these candles here by the top, that would be around $100,000. Above there would put Bitcoin above the upper second standard deviation, kicking off Bollinger Band expansion into the overhead resistance by 104. Then we take it to 106 and 108. Then above there, I've mentioned this a lot. It's, I'm taking it because we would above the all-time high and specifically above $104,000. That doesn't mean Bitcoin's just going to absolutely boom from there. But it at minimum would be, looking to test around 106 to 108 in an expansive posture for price volatility and the Bollinger Bands in this case. And we'd need to see continuation above the 108,388 here on spot. And then I'd be looking about 108 to 110, 110 to 112. And then as volatility increases, 112 to 115, 115 to 120, 120 to 125, so on and so forth, up to around the next major fib level, which, would be like 125 to 130. And we do have the 1414 of the Fibonacci extension from the prior cycle bear market pull from high to low. And realistically, I'd be looking around, 128 to 130. And that also, I failed to mention that this is also the top side of this box, just shy of $104,000 where this very highly volatile candle came in from the 5th of December. Well, that's right around the 1272 or 27.2% above the $69,000 all-time high of the prior cycle. So that particular extension, the 1272, is pretty important as well. Need to see closes above that to even go test that all-time high now. But above there, eventually I'd be looking realistically, if it were to happen, let's say, man, the Bulls they've got some work to do, especially if they want to start pushing into the inauguration. If not, then we're looking at this probably bleeding out into February. But I'd be looking as if things do get moving back to the upside, 120 is probably a pretty realistic area to be looking. And I'll take this move down now on a fib extension. We had the low, and now we have a new low, so we can just kind of take a look at where things kind of line up. And you can see that above the all-time high from this local fib pull, on an extension, we'd be looking for the 1.168 here, or the 16.8% above would be somewhere around, like I said, 110 to 112. That's coming in at 111,500. Above there, you've got 113 at the 1272, 114, 116 at the 1414, and then the 1618's up here at 120. But this needs to confirm a low at minimum for this to be a valid pull now. But roughly, in terms of volatility, that's kind of what I'd be looking at anyway, provided Bitcoin doesn't drop further. And then, of course, also provided it doesn't lose the 88,700 level. So basically this low swing over here. Now, let's go ahead and take a look at our areas of interest on RSI. So RSI, if it does put in a low, it was a lower low. This would be a slightly, if it just puts in a low right here, right now, on a close, we'd be looking at a drive of regular bullish divergence. We got lower lows, slightly lower lows on the price action there, slightly higher lows on RSI here. But again, nothing is confirmed. What would confirm a low being set? Well, that would be a close back above the Friday wick high for me. And that is, of course, going to be 95,862, or right around this close open low here. And that is something that I will pay attention to over the weekend to see if price holds up in this area or drops down further, and then we'll just reevaluate from there. But as it stands right now, 95,862 is the number to beat to the upside for the bulls to get that regular bullish divergence between these two lows with that higher low on RSI. And then, that'd probably be good enough to pop things back probably roughly around, that $100,000 region. And then we kind of just take it from there. I wouldn't be totally sold on this thing resolving itself anytime soon from the looks of it now, unless it gets its ass moving, maybe started over the weekend and then that bleeds into the week. But I don't know. We saw something very interesting going on in lower term timeframes, and that was 14 freaking bars to the upside here. This is not anything we've seen in a very long time, and it's very tough to do, by the way, on an asset that's around $2 trillion. So we have a little bit of manipulated price action, if you will, and that was pretty interesting. Of course, coming into some economic data that dumped right back down into higher low structure on something like a 4 hour. Well, it's almost looking like it's a nice low swing, like high low swing. This is just chop. This is big expansion down to compression. I'm not really looking at this to resolve this weekend. If it does, great. We get some resolution either to the downside, break down below 92, and we get some expansion down further, or it breaks out to the upside, above, basically setting a low, 96, 9 here. So right around that 96.8 region that we were just talking about. But, and I'm not too excited for this to wrap itself up anytime soon. I'm also not looking for $40,000 that I'm seeing all over my timeline all of a sudden. Really? Okay. Have you looked at what miner's electrical cost is? And I'm going to show you miner electrical cost, or at least the best analogous that you can get publicly. And it does, for those that know this, I do participate in mining Bitcoin. So I do actually have my cost metrics for electricity, which is usually the lowest price that you'll ever find Bitcoin. I'm going to demonstrate that in just a moment. And there is a public resource for that. Caprioli Investments has a chart. It's not a very good one anymore as it's kind of outrunning his chart, and they haven't updated the site, but the metrics are good because they're within the margin of error for what we're seeing for many mining operations around the United States here, at least. Yeah, we'll take a look at that in just a moment, but let's go ahead and look at a few other things. We can look at momentum here on the daily, and you can see that the momentum pivot, now this is a regular Stoch, not a Stoch RSI. This is running a 6-3-14 255 look back. I've been asked this a lot lately. This is just crypto standard settings. Excuse me, but these settings are like crypto optimized settings. Like, these are settings that were used in traditional markets for some traders as well. Not necessarily, you're not going to see some of this stuff in like props, but it's been around for a while. For the 6-3-14 255 look back stuff, it's pretty standard stuff. But $102,000 is the momentum pivot. It's looking like it's going to go into the bearish control zone. Of course, this is a regular Stoch, like I said, not a Stoch RSI, which measures the velocity of RSI. This measures close over close price momentum. In this case, it's down, and pretty heavily so. Now, the advantage to doing that is you can actually utilize trendline regression stuff, like these highs here. This essentially tried to violate the highs here ever so slightly. It didn't get both the K and the D read above, which is what you want to see. It actually rejected this trendline regression. And Stoch RSI, if you try to do that, it's a fool's errand. Just don't do it. Maybe if you have some sort of system that you like with it, great. But we already use RSI. We don't need another indicator of an indicator in this case. We just want to see where the pivots are for price action in this case. So $102,000 would turn that back to the upside. So if Bitcoin holds this low, that number will come down in terms of the pivot, but we still need to see the low set on a close. So we need to see that close above 96, 862. So something to keep in mind is you can take a look at the 12-hour. You see the 12-hour is a very clear range in terms of the band's volatility here. So the volatility levels of interest as it relates to some of the major areas of support and resistance, right? So below the lower second, guess what? That's right at $92,000. We're pretty much, what would happen is you'd see the lower third spike down into that 88,700. To the top side here, you see the upper second, right around that 101 area at coming in at 101,500 or just shy of 500 there. And then the upper third just above $104,000 or just below it. I can't really tell. It's just below it. It's right around the 1272 fib extension up there. But essentially, we have a range of interest, not just in terms of support and resistance, but also in terms of the way our bands are lining up with this support and resistance areas of interest. And, expansion up would just be expansion into overhead resistance. We need to see 104 closed above. Expansion down would be expansion into support. We need to see closes below 88,700. So just be cautious if you're bearish, be cautious if you're bullish here. This is setting up for a little bit of a grind, in my personal opinion. That doesn't mean that it's going to play out like that. Please don't hold me to it and hold my feet to the fire on that. Now, we did see a low set here, and quite interestingly, we did get a lower low on price action for the 12-hour. We did get slightly lower lows on the close as well. Now, we did not see this populate. I think it didn't populate a bullish divergence here because the look back is a little too long, but there is a little bit of bullish divergence there. So something to keep in mind. I mean, hidden bullish divergence in this case, right? Yeah. We're looking for the regular bullish divergence, and I'm just confused myself, even though I know this shit like the back of my hand. If we're seeing lower lows on price action, we want to see higher lows on RSI for your regular. So, anyway, and this was a lower low. So yeah, regular bullish divergence is there. I don't know. I'm tired. It's Friday, so you have to forgive me. 93,870. So basically 93.9 is the momentum pivot for the 12-hour here. And this is something that you can get a good idea of where things might eventually head on the daily. So if we see momentum turning back up, we see a low set on the 12-hour, then we're probably looking at the daily getting a little bit of a front run if Bitcoin can get some distance away from the 12-hour pivot. So the 12-hour pivot right now is currently at just under $94,000. If we get a complete cross, I'd look for this to try up a little bit further, and then if it can survive on a close, maybe set a low on the daily, then Bitcoin can hold the zone. It'll shift daily momentum, but again, it's all about trend. And right now, we have we had a kind of a crappy structure here on the 12 hours indicating consolidation anyway, but we had the uptrend to the big old trend break, lower high, higher low, higher high, lower low, higher high, lower low. What is that telling you? It's consolidation or compression. Price is cooling down. And then the trend is your friend. The trend is your friend until the end of the trend. When the trend is unclear, everyone's in fear, otherwise known as a compression, a range, a consolidation, whatever the hell you want to call it. That does mean you just play one side to the other until one of those sides breaks, and then go from there. So 4-hour is something that I will watch as it relates to the 12-hour. So you can see that it is getting up into the bullish control zone for momentum here. Nothing is going on here in terms of structure that is anything appealing to the bulls at this particular moment. And to be quite honest, even if it pushes up further, it's got to put in a high, come back down higher low fashion. And this is a screwy structure from Friday, but whatever. It's got to come back down in higher low fashion, in my opinion. And then, build out its uptrend on the 4-hour and then start turning that 12-hour as it stands now. This is a nice uptrend to a big old trend break and then a lower high. And that lower high was actually confirmed over here. And then we got a swing down with a little bit of a higher high swing. So we have swing structure in place. We don't have like closing structure in place. So we want to see, I would actually want to see price come down from here. I think that would be healthy. Come down, retest, and then take out this lower high if it can hold this area for the bulls. Otherwise, bears want to see this fall apart and then nuke through the lows here for continuation into the support here and possibly through it. The momentum pivot here isn't going to hold up or be relevant for many of you watching because the next time we'll talk is Monday, but it's 93,500 roughly. And if you look at the hourly, for instance, you can, as like I'll watch the 4-hour and as it relates to the 12-hour, you can watch the hourly as it relates to the 4-hour and kind of get a good rough indication of what's going on here. And to be quite frank with you, I mean, there is a trend shift here. Is it going to hold up? Who knows? It looks like shit right now, to be quite honest. And what does it have to hold on any move back down? It's got to hold this low at 92,200, and you'd want to see it holding even better. You'd want to see it holding up around 93.5, 93,550, where the lower second is, because below there on any closes, this will kick off expansion to that $92,000 low, or somewhere around that area, and possibly further down into the support. To the upside, getting above the upper second would be taking out this high. That would be a higher low, of course, if it doesn't go any lower. And that's where you'd get the daily close potentially coming in. You can start looking at that 12-hour to see if things are holding up well, and come back to it later. It's got to build structure, in my personal opinion. I don't think it's going to be absolute rocket ship, but that's just me. I have been proven wrong plenty of times in that, because what I'm stating there is my personal feelings and not analysis at that point. Yeah, and I think that's pretty much it for the daily stuff. Let's get into the weekly and wrap this shit up. Look, bulls, you got to shit or get off the pot with this by the end of the weekend. Bulls do not want to see, in my personal opinion, closes below 96,200. That is where the upper first standard deviation of the Bollinger Bands is. If we do see that price closes below here, not all is lost. It's just that this is an additional area of confluence to the upside. Wherever the upper first falls in terms of support and resistance within the local structure, then you have volatility from the weekly as resistance, right? A volatility metric to pay attention to. Now, again, you can see where I'm getting that, below 85. We're looking 85 to 80. That's where the basis band is on the weekly. That's at $20,000 or at $20,000 at $80,000. That's the 20 simple moving average, which is the basis band. Just to reiterate that fact for some of the newer people, above the upper first standard deviation, Bitcoin is, from a volatility standpoint, you have to take all of the confluences together, but from a volatility standpoint on closes, we are looking for, the overhead resistance to the upper second standard deviation, currently coming in shy of 100 and it's not shy, it's above $113,000 at 113,160 or so. Now, if Bitcoin turns this candle green, that's likely going to be like 114, 115. I don't have an opinion, and I don't personally think that Bitcoin's going to run there over the weekend, but that's just me. Again, above there, we can start, obviously in the longer term time frames, targeting up further. You can see that that upper third is right there at $130,000. So I'd mentioned, kind of, above 120, we're looking to 125 to 130 as the main overhead resistance. And then of course we have confluence with the fib level up there. Weekly, in terms of our RSI, yes, there's bearish divergence on this. I want to see in-trend bearish divergence. We don't have that right now. We have the potential to set a closing higher low at some point in this area, as long as this low now holds, this new low coming in at 91,187. So, this would be a swing high to swing, swing higher low in this case, but we want to see it close the low. And for that, we'd want to see closes above this high from late December, coming in at 99,887. So 99.9 essentially, or $100,000, much like we had mentioned before. So that's what I'm watching. This is not a time for panic, and I'm going to show you kind of why. Please, I want you to know that you are going to be blinded here in just a moment. This chart is not in any kind of a dark mode. It is a blindingly white chart. So here we go. 1, 2, and 3. And we've got the Bitcoin production cost. All right. One of the things that you can see the charts running off of the page here. They have to fix that. But the electrical cost is the bottom dark bold red line here. And that's the electrical cost to produce Bitcoin, or in Bitcoin terms. That's aggregating like all of the PPA stuff and hash rate. It's doing a lot of different things in terms of calculations, and a lot of miner watching to kind of figure out what the average electrical cost is. And the electrical cost is almost always acted as the absolute floor for price, if it were to get there, especially when it's uptrending and takes a sharp move towards it. And you can see back here in 2016 into 2017, Bitcoin was just riding the electrical cost up. Bitcoin legged up, mining electrical costs came down significantly. Pump, right? That was the Trump pump. And, total production cost, it was living under total production cost, but that's normal in some of those consolidation time periods. You can see that in the bear market, it didn't even get to electrical cost, but electrical cost did drop as machines were getting shut off. Kind of went sideways and up, took another big dump down. We had the 2019 where Bitcoin spiked the actual closing all-time high in the monthly from 2017. And this is where it was right around that $14,000 region. Everybody's like, oh my God, it's going to go for its all-time high. Well, the closing resistance on the monthly was right there at 14. Went into a weekly downtrend, and everybody screamed, oh my God. And when COVID hit, that, oh my God, it's, who could have seen this coming? Like, we're in a fucking weekly downtrend and volatility is increasing. What did you expect? Now the exacerbation of the move on that day and that kind of stuff. Yeah, It went deep. But you notice where it went to? Just barely wicking through the electrical cost there. And that's kind of what I want to make a point of this. You can see electrical cost is right now being measured at around $60,000 to $61,000. And that is within the margin of error for like what I'm seeing for my rigs. But that is basically the floor. It's very rare. I mean, there wasn't even people during the COVID period dump off there on that day that, got coins actually filled in there. Not any people that I know. And I know institutional players. So, and even they didn't get their fills there, right? So, you know, that is, if you can get in under electrical costs, you're a freaking genius. Great, good, do it. Excuse me. The only time you're going to actually get in under electrical costs is just post halving, like back here in 16 and back here in 20, and then of course back here in 2024 in April. So, that's really the only time you're going to get in under electrical costs for miners. But this is not financial advice. Even in a hellacious dump off, I'm not looking at 40K. It's just not, I can't see it. My brain can't comprehend that. There's just no historical data for that ever happening. When you take into account the actual fundamentals of the network. So, I'm sure there's plenty of people that would argue, but they'd be arguing from a feelings point of view and not a reality point of view. So I did want to point that out. The other thing is, in terms of fundamentals, is like, we're still seeing Bitcoin just flying off of exchanges. So, this is, since the ETF launch, just boom down, and I don't expect that to stop anytime soon. Especially if the agenda of this incoming administration is fulfilled, right? We'll see what happens day one. I'm sure that everybody in crypto will be watching very carefully what was talked about concerning the Bitcoin strategic reserve being placed with the Treasury over there. And everybody's watching what's going on with Arkham and like, oh my God, they sold all the Bitcoins. No, they didn't. They did not sell the Silk Road Bitcoin. This is the wallet right here. You can refresh. This is Arkham Intel. And you can see here that they have not sold anything. They still have their 69,000. Oh, I want to see them get to 69,420 and then sell it. That'd be freaking hilarious. Just for the memes, right? And the discounts. But, it's about $6.5 billion worth of Bitcoin that they got. Sure. They were authorized to sell this all the way back in March of 2023. So I don't see them actually selling it before the 20th, and I don't think Trump is going to be selling it either. So, yeah, that's just me. Don't worry too much about this kind of stuff. You have a wonderful morning, afternoon, and evening, and of course, weekend. I hope that you all trade safe, and of course, as always, stay safe. With all of that being said, well, Landy out. Take care.